G'day folks, welcome back to Pete's Investing. It's January 24, 2024. This is the S&P500 technical analysis and economic outlook. Now we've got a divergence to look out for, just be aware of that, and a potential reversal on the charts. So let's get straight into it. So first you can see what the weekly, the daily and the hourly for those new to the channel. And we're looking here on the weekly. You've got the CCI400, our trend indicator, and that's in a bullish run. It has been doing that for some time. The CCI150 is our divergence indicator, and this normally tracks in line with the price, which it has done so in the last few weeks, and that's still making new highs. Now, just so you understand the divergence indicator, you'll notice back here we had a few bearish divergences, and the price has fallen off a few times according to those divergences. So, for example, looking at this one back here, there was a bearish divergence on the CCI. Let me just blow this up a bit. There was a bearish divergence on the CCI versus the bullish divergence on the price. Now you can see there it fell off once and actually continued to the downside and actually fell off more severely the second time. There was another pretty much a double top on the CCI versus a bullish movement on the price, and that fell off even more substantially, and that was in the response to the pandemic and the lockdowns. And then more recently we had another bearish divergence here, prices moving higher versus from that peak of the CCI to there. At least you can see there was a divergence, and then prices eventually fell off. So you can argue each of these, well, you could have missed out on the gains had you started dropping out a bit early, but again, just be mindful that's just giving you an early warning sign to get out of that potentially. Now there is no divergence currently on the weekly, but if we move to the daily, you can see there we've got a bearish divergence on the CCI 150 versus the price, and it's hit this resistance at 48.67, and that's our current target. Now of course this could go higher, and for this divergence to fail we need to see the CCI go higher than that point there. In that case we'll also see the price move much beyond this resistance to continue higher as well. You'll notice the CCI 400 is still trending up above its moving average, so that's still bullish, but just be mindful of this daily divergence on the CCI 150. On the hourly charts as well, if you're trading the lower time frames, we've also got a separate, and again these time frames are independent from each other in terms of divergence. You can see we've got pretty much somewhat a neutral movement on the CCI 400. Notice the price is making new highs, but the CCI 150 is making new lower highs, I should say. So that's a bearish divergence. Now if this bounced to the downside, for this to work, we would expect from that low, let me try that again, from that low, a bit slow today, to that high, and we would expect the retrace at the very minimum to fall back between the 23 and the 38% levels. That's a minimum. Of course it could go a lot deeper. In fact it could go even more than 100%, but at the moment, at the very least, you could have a bit of a retrace possibly, and by then we should see a bit of a movement to the upside on the CCI as well, in which case we could start taking long trades again. But at the moment, just be careful. If you're long in the current market and you're in profit, it's probably a wise move to take profits and get out of it until we see more of a bounce on the CCI at least. So that's where we are on the US S&P 500. The same is applying to a lot of other markets, including the DAX, the FTSE, and the ASX and the Nikkei. So just be mindful of those. So at the moment, just be careful about going long until we see a more bullish movement, especially on the CCI 150. Also some economic outlooks in terms of where the markets are going. So making sure you understand the volatility and uncertainty of the S&P, with higher swings and lower driven by macroeconomic concerns and earnings reports. Mixed earnings season. Some companies report strong earnings while others miss expectations. So this obviously has an impact, plus and minus. Rising interest rates with the Federal Reserve ongoing rate hikes can impact stock valuations and potentially dampen risk appetite. Geopolitical tensions, global conflicts such as the Ukraine war, the Middle East, and possibly even Taiwan in the future. And technical indicators such as for potential for a rebound and others point to continuation of volatility. In terms of other considerations, macroeconomic concerns, monitor inflation and interest rate hikes, earnings seasons, evaluate company-specific earnings reports, and geopolitical tensions, stay informed about global conflicts worldwide. and also technical analysis we spoke about. Just some of the data sources for further reference, should you wish to go any further into a deeper dive. So again, just be mindful of the divergence that's playing out at the moment. Be careful about going long. That's it for today. If you got value out of the video, hit that like and subscribe button, hit that notification bell. Thanks for watching, and see you in a future video.